Good morning, and welcome to today's webcast, How to Enhance ROI from Your Existing IT Investments. Before we begin, I'm going to play a brief housekeeping video.
Welcome and thanks for joining us. Our webcasts are designed to help elevate your business performance. Transform your future for the better with advisory solutions tailored to your vision and supported by our collective technical resources. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget. You can ask our presenter questions during the webcast by typing a question in the Q&A window and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Before we get started, I wanted to share our big news, that Moss Adams and Baker Tilly have joined forces to redefine accounting, tax, and advisory services for the middle market. It's really exciting, and you can read more about it on our website via the link in the slide deck and handouts widget. This is a 3-part series, including today's webinar. Please join us for the remaining sessions. August 20th, uncover and eliminate costly IT inefficiencies. September 18th, aligning people, skills, and systems. With that, I'm pleased to introduce today's Digital Advisory Services presenter, Chuck Andrews, Director. With that, I will turn it over to Chuck to get us started.
Thank you very much. So today's session, I guess I've been asked, why are we talking about getting additional ROI out of IT investments? And I think that this year's been extremely challenging for a lot of the clients that we're fortunate enough to work with in terms of federal policy, funds availability, and just general changes that are impacting budgets. And so we're seeing a lot of work in the assessment area versus larger capital projects and new software going in. So we wanted to talk about that topic and really break it down in terms of, how do I squeeze more value out of those existing assets? And so the agenda for today's session, we're going to talk about assessing your baseline. You're aligning your systems and your processes. Really trying to leverage the components that you already own, further engaging system users, and monitoring the progress for how well your improvement efforts are doing in terms of getting the additional value out of the system. And so the first thing I'd like to talk about is today's baseline. When we're doing assessments, the most important thing for us to figure out is where are we today? And the first part of that is getting a complete inventory of all the systems that are out there. And what I mean by that is going out and getting the details on licenses and subscriptions, the related cost, and the detail on the modules that are involved with that subscription or license agreement, right down to user counts, if that's applicable. There are systems out there that don't charge by user, they charge by transaction, but by and large, we see the user counts are the biggest determinant there. And so that is easier said than done in many cases. I recommend that when you're looking at those license agreements, get your vendor to spell out the details. Or if you have a reseller that's associated with that software product, make sure they explain it to you in plain English. With the advent of software as a service and the move to annual recurring revenue, subscription agreements can be a little cryptic, the way that they're packaged. And so you don't necessarily know what your entitlements are in layman's terms. And so it's good to get the vendor to help you out there. And with the advent of software as a service, some vendors we're seeing are actually doing swap agreements, wherein if you have a component that is not relevant, they may allow you to trade out for things that are more relevant or extend the licenses that are relevant in an extend and blend kind of an agreement. I think Salesforce is leading the charge on that in terms of that. Not available to all users, but something to think about. And I think when you're looking at that inventory, it's really important to consider all of the systems in your ecosystem. Ask a lot of questions. I know that there are a lot of shadow systems out there. I worked with a large hospital system at one point, and I think they probably had 35 systems that the IT group wasn't aware of. It's pretty interesting what you find out when you actually go out and dig for what people have subscribed to. Because unfortunately, users don't realize when they agree to a subscription, and even if it's free, they're agreeing to T's and C's. And so it's really important to know what systems people are subscribing to, particularly the free ones, because if they're free, they're taking your data, you're the product. And it used to be able to look at your accounts payable and sort that out and just say, okay, who are all of my technology vendors, my software vendors, that kind of thing. Some of them aren't going to show up if they're offering a free service or trialware. So it's very important to consider all the systems that your users are using. So once you've got that inventory, you want to take a look at how those systems are being utilized and if they're being utilized. And I typically like to break that down by not only user count, but separate that out by department or sections in the process. Like I break down order to cash, how many of my salespeople are using the system versus how many of my operations folks who are delivering are using the system, versus, how many people in accounting are using the system, how many execs are looking in the system. And the idea there is not only do you get a feel for what am I paying for, but what does adoption look like? And in some cases, you may have to run a report in the system to figure out not only who has a login, but who is actually logging in and using the systems. And you definitely want to identify underused features and align those up with pain points. And we'll talk about that a little bit more further in the discussion. And then finally, do you have any components that are flat, irrelevant, or duplicative? I think that that's one of the challenges that we run into when we see best of breed environments, where we may have a client paying for 2 field service management systems and they're only using one and not necessarily aware that they have entitlement to another one. Perhaps they've decided not to use it, but it's a good idea to, kind of keep tabs on that so you understand maybe I'm stuck with this. It's a sunk cost until my renewal, but at renewal time, I need to drop this component or swap it out for something else if that happens to be an option for you. And so I think we have a polling question coming up next.
All right, our first polling question is, what systems are you considering for value enhancement? A, ERP accounting, B, HRIS, C, CRM, D, field service, E, industry specific, F, ops system. I'll give everyone a few moments to respond here, and please feel free to use the Q&A box if none of these apply to you.
Good deal. And what we're looking for here is what system do you think you can lean into and get more value from? And if it's all the above, feel free to put that in the chat.
All right, let's take a look at the results here.
Okay, good deal. Not surprising that ERP and accounting top the list as far as where you're finding value. CRM, I see that a little bit further down the list, and ops and industry specific. I know we had some communication carriers that were registered, and I know that BSS, OSS, particularly if it's legacy, can be problematic. One thing to point out on the results here is that when we look at ERP and accounting, I've got a saying that no problem started in the back office. And I think when you look at aligning processes, which we'll talk about next, it's a good idea to think upstream. Think about where the transaction originates. The invoice isn't the problem. The bid or the sales order was the problem. And so we'll talk about that a little bit further, but I appreciate the input on that. So aligning systems and processes. What we look at here is that I find when I go in and assess a newish implementation, say somebody's implemented an ERP and they're 6 to 12 months post live date. What we find there is that they basically implemented on a minimum viable product, and from there they need to continue the work of implementing that ERP. Typically, we find, depending on the ERP you're implementing, it's not a sprint, it's a marathon. And so you have to think in terms of long term. So it's a good idea to review your current workflows and take a look at where you have manual workarounds and make notes to eliminate them. The first thing I do, again, with the baseline, where do I have lag or constriction in the process? Where do things get held up? Duplicate entry, particularly in best of breed systems that aren't pulled together, is a rather huge issue and an indicator that there needs to be some connection between components you already own, but they aren't talking. And I think that's something we'll talk about here as far as ability to get some additional value by getting those systems connected. And you definitely want to consider the system inventory from the baseline exercise. And what I mean by that is, based on the review of the current workflow, is there a module or is there functionality in the system that you already own that solves that problem? Could be AP approvals. Does my AP approval, my responsibility chart, does it line up with the workflow that I have set up in accounts payable? Or am I using those automated approvals to my benefit? Does that workflow allow for a backup? If I've got a department that has 2 approvers, first approver gets it rather than sitting there and languishing when someone may be out. So definitely looking at the workflows is beneficial. Could be approvals on the sales side, where you internally approve a sales order before it goes out, or a bid that goes out before a customer. Those types of things from a workflow perspective can be very helpful. Some of the other things that we've seen, the automation of vendor bill data acquisition. Perhaps you own some accounts payable automation that you're not using. What does it take to get that implemented so that your vendor bills are coming directly into your system? The old 80-20 rule, you're going to have to enter some, but some of them could be pulled from PDF, scraped, and a vendor bill created for approval and payment, or match to a PO approval and payment. So thought process is there on reviewing those current workflows and again, looking for those sticking points and lining that up with what functionality might I have that addresses this issue. I think approvals and controls, the automation of those, very helpful. And again, aligning those gaps with that functionality that you may already have. And it might not be a module. It may be as simple as a configuration switch that's not turned on, that it's functionality within a module that you've already implemented. So I think getting those things aligned is very important. And particularly if you already own the functionality and all you have to do is take the time to implement it. And I know time isn't cheap either. However, if it's sitting on my shelf and it's not doing anything and I could get value out of it, that's kind of the focus of what we're talking about in this session altogether. And let me see here. I think we have another polling question here.
All right. For which process do you see the greatest opportunity for improvement? A, lead to cash. B, procure to pay. C, record to report. D, issue resolution. E, plan to build. F, industry specific. And counter to bill order provisioning. I'll give everyone a few moments to respond here. And just a reminder, in order to participate, please click the button next to the answer you choose and hit submit.
And just clarification on issue resolution, that's basically ticketing or customer issues.
All right, let's take a look at the results.
Okay, definitely record to report is our session favorite. I guess you could put this in the chat. Be interested to hear from folks. What about record to report is challenging? And maybe a thumbs up or a note in the chat if it has to do with the data that's coming at you from either another system or the subledger. So is anything on the record to report challenges the result of an upstream problem? So let's see here. We also have procure to pay. Again, not surprising. Most of the clients that we deal with, lead to cash is job one. They got to keep the lights on. So they collect money really well, but the spend is a little bit different. So. Okay, good deal. And so the next slide, I've alluded to this, and we're talking about aligning processes, but definitely leveraging the components that you own. And some of the things that we see not implemented, a lot of it has to do with decision support. And so are you leveraging the analytics and the reporting tools that are germane to the system? Are you getting the visibility that you need? And I think that a lot of people put data in the system and it's a challenge getting it out. Sometimes that's a function of how it's entered. Sometimes that's a function of either not being familiar with or not understanding the analytics engine that you have. And in some of the legacy systems, and quite honestly, some of the more current systems, that reporting system might be a little arcane. And so it's good to figure out who's going to own that from an analyst perspective in your organization and make certain that you're getting the visibility that you need. And the goal there obviously is timely decision support in terms of the data that you can provide as far as operating and managing the business. the next thing on leveraging the components that you own, integrating complementary systems for better data flow. And what I look at there, the classic example is the CRM to the ERP, right? And some of the challenges we see when those systems are disconnected, one is the catalog. In your ERP system, you have an item list. If you have a separate CRM, your ERP should be driving the catalog for your CRM. And in many cases, you have an entitlement for that integration, and it's not being leveraged. So when I look at that, integrating those complementary systems is very important. I think second to that is HRIS, payroll, and the ERP system / accounting system. Am I getting the journal entry to the accounting system that I need? In many cases, I see that my clients are getting a journal entry, but then they're having to go in and manipulate that journal entry in Excel because the HRIS system is not configured to give them the granularity that they need, despite the fact that they may be getting time entry that would support that entry. You know, my time entry does support the allocation that I need to do here as far as my cost goes. And so I know someone mentioned earlier, I need help with both ERP and HRIS, particularly in service heavy and personnel heavy businesses. We see that you really can't talk about one without talking about the other. And so that kind of underscores that need for that tight integration and really understanding what those integration points look like. And what's the system of record? Are we pushing one way? Are we synchronizing and addressing that? And for the folks that are unfortunate enough to have maybe a problematic legacy system, consider imports, consider flat files. Does a legacy system allow you to import and update versus using a live or more modern API? We see a lot of clients that deal with that, where they basically are, FTPing a flat file over or something along those lines and pulling that up. And so I think that that integration is essential, particularly when you're in a best of breed situation. And I don't know how many nonprofits I have on the phone, but right down to your grant management and your CRM, your grant management and your accounting system, what do those touch points look like, if I have a best of breed system? Same thing for communication carriers. Am I getting the data out of my billing system and into my accounting system that I need? And am I also tying my inventory in terms of how that's working for me? And I do think that in all organizations, you hit a point where I used to be able to deal with them separate and, it wasn't that heavy a lift. But once you start scaling up, that's where things tend to become problematic. And if you're not in a position to shoulder a brand new system, all right, how do I get the systems I do have talking? All right. Another example of that is if I can't get these two systems speaking directly that have complementary data, what decision support system or analytic system can I put between them to pull data from one, pull data from the other, relate them, and still tell the story that it takes to manage the business? I have got several communication carriers that are doing this right now, several medical providers that are doing this as well. When they don't necessarily have that connection, they get the data where they need to, and then they tell the story there. So kind of a compromise of sorts, but I'd rather have some visibility than none. And I think that helps out. And finally, on leveraging the components that you own, if you have the ability to enable mobile users, and what I'm talking about here typically is field service, and there's a lot of organizations that have that. And also any organization that has a salesperson that's a road warrior has that. If you've got the ability to get a mobile app deployed and allow them to do their job in the field, that's very helpful. And that could come right down to AP approvals, If I can approve something on my phone, let's get that done, particularly if I have an entitlement to do so and that has yet to be rolled out. And so let's go to the next polling question.
All right, which module do you have that needs more implementation work? A, CPQ, B, EDI tuning, C, bank integration, download matching, D, AP automation, E, integration between systems, and F, industry specific. And I will give everyone a few moments to respond here. And for those of you that would like a copy of today's slide deck, you can download them from the folder that says slide deck and handouts. We will also be sending the slides via email after the webcast. And let's take a look at the results.
Okay, good deal. So AP automation and integration seem to be our leaders. In fact, integration, I guess, has nosed ahead there. And so it sounds to me like a lot of the attendees we have here have got a best in breed environment, and you have some gap between the systems. I do think that if you don't have an entitlement that allows you to integrate, like the systems don't have a module, like, like as an example, my ERP system has a connector to Salesforce or to HubSpot, which is my CRM. A lower cost solution may be an integration platform as a service. There are vendors like Celigo, MuleSoft, Boomi, that allow you to make an easier job of integrating because they don't necessarily require programming. It allows you to have a business analyst figure out your data flow rather than having a programmer figure out your data flow. And again, those are integration platform as a service, or IPaaS. What's nice about those systems is that they kind of abstract both ends of the integration. So if I keep my CRM and I change out my accounting system, I'm only rebuilding one side. I'm only repointing to one new object. And they tend to have a little less overhead rather than just trying to program out completely from nothing. Okay, create this export file, or let's write directly to the API. They take some of that burden off of you. And while it's not necessarily the replacement of a system, you can augment with that and still connect those dots. And on the AP automation side, I think that really once you have a mid-range ERP implemented, as I indicated, order to cash or lead to cash tend to go first. Procure to pay, source to settle, those tend to lag. And the two big things there on the AP automation, obviously approvals, but also that vendor bill data acquisition. And I think that those systems get better every day. Sometimes they're baked in, sometimes they're a third party, like Bill.com, Tipalti, providers like that. But it does provide quite a lever for getting things paid and keeping the head count under control when it comes to AP departments. So I would be completely remiss, and we're going to do an entire section on this, if I didn't talk about engaging system users. And let's call them what they really are. They're stakeholders. And I think system adoption is very important, and especially outside the back office. I don't think anybody in the back office doesn't want to implement a system because it makes their life easier. I think once you get outside of the back office and you're talking about pulling people into approval workflows, for expenses or for accounts payable transactions, it tends to get a little tedious, or can be. But I think that we have to consider the people element, because it's the biggest lever that you have. And we used to have a joke back in the IT world that the problem existed between the chair and the keyboard. We called it PEBCAC. And the user is the biggest point of failure and the biggest point of adoption. You decide, right? And so I think it's important to provide role-based ongoing training. And again, you might already be paying for it. If you are paying for online training, get awareness out there. Make sure people understand that. I also think that if you have not taken a look at the training that's available and tailored it to your processes, that's an important thing for you to do as well, particularly in areas that you find you've got the greatest risk. And so I think that's a very important thing. And again, people come and go in an organization, they change departments. It's important to keep that fresh. I think you have to foster user engagement and support. When you're rolling out something new or you're making changes, whoever the champion of that change is, consider office hours to engage users. Hey, I'm going to be on Microsoft Teams from 10 to 11 tomorrow. If you have a problem with AP approvals, or if you have a question about AP approvals, drop in. We'll talk about it. One way to handle that and open those lines of communication. It's amazing to me how people outside accounting don't understand the impact that they do have on accounting. So any touch points you guys can have to be positive, definitely going to help. Which leads to the third point of a culture of continuous improvement. How are we going to do it a little bit better today than we do tomorrow? I'll get back to the concept that it is a marathon, not a sprint. And so getting through a complete ERP implementation, once you get beyond that minimum viable product of pay the employers, pay the vendors, bill the customers, the three things you got to do, getting beyond that to truly transform and get more efficient, it doesn't happen quickly. And I think it's a good idea to have that continuous improvement of, yes, we're going to get there. We're going to have another session on September 17th just to cover this topic on people alignment, because we find that's absolutely essential to transforming an organization. And I think we have another polling question coming up next.
We do. What, if any, roadblock do you see to user adoption? A, training. B, falling back to previous processes. C, communication issues. D, budget. E, all of the above. And we will give everyone a few moments to respond here. Give everyone a couple more seconds to submit their answers. All right, let's take a look at the results.
Okay, so a lot of all the above, definitely, typically a mixture there. And I think it's interesting. I'm not exactly glad that the falling back to previous processes resonated. I think that we see that a lot within organizations where there's shadow systems. And when I say shadow systems, I mean, I put together an ERP system here that should be handling all of my transactional data, but for some reason, there's a trust issue or just a muscle memory issue where I'm going back to doing it the old way. And I think that that it's a challenge there to address that. the main thing that I look at is that there has to be top-down support for the new process. And I hate to say it, even though you want to bring people along, there has to be a point where you stop asking it like a question. For instance, I'm getting invoices coming in and I have no PO. You know, mandate that doesn't get paid, you know, train the vendor, and the vendor is going to go back to the person that originated that and have a discussion with them. And I think that there's things that you have to do there from an accountability standpoint to address falling back to those old processes. And a big piece of that is going to be visibility. And budget, to me, goes without saying. And I think you have to leverage technology where you can and leverage entitlements where you can to get that. And I think Anthony's got a great observation here. There's no huge shared services department waiting to help you out, right? And so I think that the human capital deficit you're talking about there, definitely real and definitely a problem. And I think in the mid-market, there has to be champions within the process that work with it. And you have to leverage some of the new communication tools out there to try and get the word out and to get that communication going. Because at the same time, you don't have the human capital. The humans you do have are even more important. And so we have to figure out how to get them engaged. And again, we'll talk about that further in that follow-up session I mentioned earlier. And so final topic here is monitor progress, get that visibility. As an example, number of invoices with POs and without POs for purchasing systems. I call them orphaned invoices. If I'm creating a PO after an invoice lands, I'm creating a work of fiction. A PO is a pro forma transaction. And so one of the key KPIs that I look at is really easy to get is what do my standalone invoices look like? Now, I've got to eliminate some of those because I'm not going to do a PO for rent and power, right? But there's certain types of purchasing that you do have, non-recurring bills, where you should have that pro forma transaction if you have rolled out a true procure-to-pay system. And one of the easiest ways to tell that is, where am I seeing invoices without a PO, and what department are they going to, right? And also, if there are POs, is the date of the PO after the date of the invoice, right? So different ways you can try and figure that out. And I know with some systems it's impossible to backdate, but some systems you can do that. And it's an example of a key performance indicator that's going to help you figure out how well you're doing on adoption with accounts payable. Another one would be how many vendor bills were entered manually versus how many bills did OCR bring in, right? And this is where I look at process KPIs, right? You can do the same thing potentially on the sales side. How many of my sales orders were converted from bids or quotes versus created directly? That whole chain within the process helps out a great deal. Another one, number of logins by user, I think is very important. And we alluded to this when we talked about establishing the baseline. I have the module. How many people are actually using it, right? How many people are actually logging into the system? And some systems will give you a little bit more on the user activity because the folks that are trying to defend their recurring revenue by selling you guys these software as a service systems, they'll have dashboards for user engagement in many cases. So you can kind of pull up and see, you know, what modules are being leveraged, what modules aren't being leveraged. And in many cases, you're entitled to that report, and it's good to leverage that. It's a solid KPI to use for how well you're doing. Next bullet, I think you got to communicate your successes and your return on investment to stakeholders. Underscore improvement and related value. And so when you look at this ratio movement, DSO, cash position, look at that as a trend. If it's moving in the right direction and the system is moving it, that needs to be communicated to the folks that are driving budget, making decisions. You need to understand that. If it's going in the wrong direction, it tells a story about what you need to invest in as far as a corrective position. And I think that some of the big pieces here are, is it delaying revenue, right? I know we have one or two folks from healthcare on here. If revenue cycle suffers, everything suffers. I have to get bills out and I have to get cash collected, cash out, cash in, right? And so it's important that we're looking at those ratios and making certain that they're going in the right direction. And then finally, establish ongoing system maintenance and governance. Despite the fact you're tight on people, it's not going to take care of itself. Somebody has to own the system or somebody has to own the module. And in the mid-market, that person has a day job. There's no other way I can say it. We're exclusively a mid-market firm. We understand those challenges. But at the end of the day, when we come in and assess and we help, I have to have owners for these processes or components within these processes. And up and downstream, those people need to be collaborating and talking. And so I think that ongoing system maintenance and governance is absolutely essential. And it's important to make certain that if you have a vendor engaged, they understand how things are going for you. I've had many cases where I've gone in to assess companies, or I've had companies come to me and say, hey, we need to rip out our system. It's not working. And then I find out that nobody in senior management at that company has got the software vendor on the phone and saying, hey, you're closing my business down. What are you going to do about it? I think it's important that you have that senior level engagement with your vendors wherever you can, and that you're dealing with that system ownership to truly transform. And so I believe we've reached the end of the road as far as my talking points. Wanted to see if we have any questions in the Q&A. Let me check this out here. Let's see. I think I've got a lot of statements. I've got one from Shelley about limitations on record to report the way we do our business. I think one of the things, while painful, that a lot of accounting departments need to consider is, do I need to restructure my chart? Like, am I using a legacy chart of accounts? And have I looked at the fact that I could be leveraging reporting dimensions or three-dimensional financial reporting instead of a rather deep chart? I've been in this business a long time. I remember when every customer had a GL account, right? You got a subledger now. You don't have to do that anymore. When it comes down to questions like, how am I performing in geos? Or how am I performing in industries? Or, what is my gross margin by customer? Reporting dimensions, which every mid-range accounting system has now, can help with that a great deal, but it involves getting those transactions or those transaction line items assigned the way that you need them on entry. Don't wait for the invoice. Make it happen on the sales order if you can. So when it comes down to that kind of thing where, all right, do I need to restructure my chart? Again, painful, I've been through them. Once I do that, what do I need to do on a go-forward basis to keep my data clean so I can use that new structure? I think that when I hear, I can't get my close done or I can't get the reporting that I do need, typically I think that's because the business has either pivoted or I've moved from an old accounting system to a newer ERP, and I didn't do anything in my chart to take advantage of that new ERP. So let's see here. The statement again, a lot of statements about not having time. Unfortunately, we can augment your staff, but I follow you. Mid-market's tough. So with that, I think we can wrap up. Delia, is there anything else we need to do in terms of closing?
Thank you so much, Chuck, for a great presentation today. If we didn't have time to answer your questions, we will do our best to follow up with you after the webcast. Here's a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey, as your feedback is very important to us. Please also visit mossadams.com for future webcasts and other resources to help elevate your performance upward. Thank you for joining us, and we hope you'll join us again next time.